Welcome back. South African households are being forced to make tough financial choices just to stay afloat, with inflation edging higher and the South African Reserve Bank set to announce its latest interest rate decision tomorrow. Many families fear borrowing costs could remain elevated for longer. Business reporter Ndogozo Khumalo has the details.
South African households are feeling the strain of the rising cost of living, with many tightening their belts to make ends meet. As the South African Reserve Bank prepares to announce its latest interest rate decision this week, financial experts say consumers have already cut back on discretionary spending in an effort to cope with mounting financial pressure. The latest economic data shows household spending barely grew during the first quarter of the year. Consumers spent less on groceries, eating out, and insurance, while most of their income went towards unavoidable expenses like electricity, water, and transport. The trend shows households are prioritizing essentials while cutting back where they can. Debt counselors say those difficult financial choices are becoming more common. Debtbusters' latest money stress tracker found that about 7 in 10 South Africans are under financial pressure, with many worrying about running out of money before month end.
Certainly spending less on unnecessary travel. So, whether that means taking fewer trips if you are having a car, or if you want to fund a car, potentially going down one level instead of the more expensive car, maybe funding slightly cheaper car. Those are some of the behaviors that we're seeing.
Lower income households are being hit the hardest. For many minimum wage earners, their monthly income is not enough to cover food, transport, and electricity, forcing families to make tough choices.
You also see people also cutting down even on essential expenses, maybe buying cheaper brands or changing brands in terms of groceries, the quantity as well, to really show that, yes, we are going through a lot and we're also making means as to how we can downgrade.
But Moyana warns there are some expenses households should avoid cutting, like skipping debt obligations.
Missed payments will affect your credit record. It will also result into higher interest, legal action, or even repossession. So you don't want to find yourself in that position.
They also encourage families to have honest conversations about money.
I would urge every one of us to actually talk to the people in our household about how finances are affecting yourself and the rest of the family, your extended family included, because generally you would be surprised that they will be willing and able to also make a plan.
The pressure intensified after inflation accelerated to 5% in June, the highest reading since 2024. Transport was the biggest driver of the increase, as fuel prices pushed up the cost of taxis, buses, e-hailing services, and school transports. Economists say the latest inflation reading highlights just how uncertain the global environment has become, trickling down to South African households.
What this shows is that we're living in a volatile time with a lot of uncertainty, a lot of geopolitical uncertainty. And in those times, we probably, when the situation isn't as rough as it is now, we need to put some money away for times such as these as a bit more of a buffer for these kind of international macro effects that we get whacked on.
Blackmore says families should avoid cutting back on essential spending like maintaining their homes. Instead, they should continue reducing unnecessary daily expenses and save for emergencies where they can.
If we don't do that, then we get bigger problems that we have to solve with bigger amounts of money. And so I think for both a country and a consumer at this point in time, you just have to keep what you got in good working order, try and be as efficient as possible with your expenditure, and then put some money away.
The Reserve Bank raised interest rates in May, pushing the repo rate to 7% and the prime lending rate to 10.5%. With inflation now back at 5%, economists say Thursday's interest rate decision is a close call, with many households hoping borrowing costs don't increase again. For Newzroom Afrika on Channel 405, I'm Ndogozo Khumalo in Johannesburg.
Now on to this. The National Consumer Commission is warning motorists about recall